What's up, YouTube? My name is Ty, financial advisor. Welcome to my channel. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is EVFM, Evofem Biosciences. This finishes at $1.10 today. That is up 20.88%. So we covered the stock last week. This came out of nowhere, started short squeezing, along with a few other contraceptive companies, and that was because of the overturning of Roe v. Wade. So it seemed like the market is speculating that more women are going to get on contraceptives now that abortions are not available in a lot of places. Didn't really hear too much about the stock after this initially squeezed, but today, this did make top 10 on StockTwits again. I believe it had over 2,000 mentions. So once again, we're going to analyze this. So no company-specific news to justify this price action today. It just seems like the squeeze is still on. Ape's still in here, still diamond handing, refusing to sell, and they just keep on buying.
With diamond hands, they knew they'd profit if they could only hold.
I will say though, it is a little weird because the momentum has been cooling off. This has been losing significant volume every single day, which is pretty counterintuitive to a short squeeze. But the price has not gone to the downside and it's holding up pretty well here. But alright, let's go ahead, let's jump right in and analyze here. So first of all, this is a cup and handle in the making. Bottom of the cup being the low of 28 cents, and there can be multiple possible tops. It can be 150, 225, 350, 455, 555, 620, or $8. And longer term, this is part of an even bigger cup and handle, where this has the potential to go back up to 112. But those are all bullish indicators. That is telling us that the stock should come back up to one of those tops to complete the cup. And then we do have a triple gap down. First gap down is back at 975. So that's a bullish indicator. That is telling us that the stock should come back up to 975 to fill that gap. Second gap down is at 235. So another bullish indicator. That is telling us that the stock should come back up to 235 to fill that gap. And the third gap down is at 165. So that's another bullish indicator. That is telling us that the stock should come back up to 165 to fill that gap. And then we do have a gap up at 50 cents. So that is a bearish indicator. That is telling us that the stock may come back down to 50 cents to fill this gap. In the aftermarket here, this is running down to 108. So if this aftermarket action holds, that would be a bearish indicator for tomorrow. That is suggesting that tomorrow the stock will sell off. And here it does appear like we have a descending triangle forming. So right now this is consolidating between 120 and 30 cents. So there still is more consolidation to go, but this should consolidate somewhere around 65 cents. And then from there it should break out to the downside. So the descending triangle is a bearish indicator. And if you guys want to follow along, the link to the chart is in the description down below. So right now this is trading between the sideways channel, the rectangle of 115 and $1. So if this goes to the upside, next levels of resistance would be 115, 135, 150, 165, 225, 240, 260, 275, 285, $3, 320, 330, 350, 360, 385, 405, 425, 440, 455, and then 510. There is resistance above 510, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be $1, 92 cents, 80 cents, 50 cents, 40 cents, 36 cents, and then the low of 28 cents. So right now at the current price, 110, the channels to the upside and the downside are pretty decently sized, so expect a regular amount of price action either way this goes. However, if/when this breaks 165 to the upside, the channel starts to open up and get wider. So expect a significant increase in price action if/when this breaks 165 to the upside. And to the downside, if/when this breaks 80 cents, the channel starts to open up and get wider. So expect a significant increase in price action if/when this breaks 80 cents. RSI is currently at 61, so not quite overbought and overvalued, but above average there. So according to the RSI, the current price of 110 should be a little bit lower. And this did 58 million in volume today. Very significant volume, way above the average of 4.2 million. So this pump/squeeze today was confirmed by the volume. And again, this is a little odd here because we are getting some pretty significant pullback in volume. So losing a lot of retail momentum here, but it's still going strong. Okay, guys, just my opinion, not financial advice. So not much has changed since we covered this stock last week. It's going to be more or less the same. Long term, this looks really bullish. We have some very strong bullish indicators in the cup and handle and triple gap down. But in the short term, it's a bit difficult to tell where this is going to go. There's actually a good chance this comes back to the downside. Again, we have some short-term bearish indicators in the gap up, descending triangle, aftermarket action, and above average RSI. So since there are more short-term bearish indicators than bullish indicators, I think this is still due for a pretty big pullback before it goes to the upside again. So therefore, if you want to go long, not financial advice, I would not do that. It's not necessarily a bad play, just extremely risky. So again, there is a gap down at 165 and a gap up at 50 cents. So either this is going to go back down to 50 cents and then back up to 165, or back up to 165 and then down to 50 cents. Either way, it's coming back down to 50 cents. So this is still short squeezing, and there is some pretty decent upside potential here. But I think the play here is to hold off and set your buy orders to 50 cents, where the gap is. Not sure how long it's going to take to go back down there, but eventually it should, and I think that'd be an excellent entry. So I guess the current price of 110 isn't exactly a bad entry, especially if you're going to hold this for the long term. Again, this should come back up to 975 eventually to fill the gap down. So from the current price of 110 up to 975, that would be about an 800% upside. So huge upside potential in the long term. But again, this should also come back down to 50 cents. So from the current price of 110, that would be about a 55% downside potential. So I would say going long at the current price, 110 would be a high risk, very high reward play. If you want to go for it, it's not the worst play in the world. If you're going to buy and hold, it's actually a pretty decent entry. But again, I do think this will come back down to 50 cents at some point, and I think that'd be a much better entry. From 50 cents up to 975, where the gap is, that would be over an 1800% upside potential. So I would say going long at 50 cents would be a low risk, very high reward play. So I think 50 cents would be an excellent entry, and you really can't go too wrong there. Now, if you want to go short now, financial advice, seems like a pretty good play to me. It is somewhat risky though. So again, I do think this will come back down to 50 cents. And again, that would be a 55% downside potential. So a huge downside potential here, but this may come back up to 165 to fill the gap there before this comes back down to 50 cents. So from the current price 110 up to 165, that would be about a 50% upside potential. So yeah, 50% upside potential, 55% downside potential. I would say going short here would be a high risk, high reward play. Somewhat of a gamble, so I wouldn't really recommend going short here for anyone with a low risk tolerance. But as long as you're able to withstand upside pressure here, I do believe this will come back down to 50 cents eventually, and that would be some very fat gains to the downside here. So I would support going short at the current price, 110, and I would cover at 50 cents where the gap is. And that should be a relatively easy 55% to the downside here. But again, it is somewhat of a gamble, so if you want to go short here, please do that at your own risk. It's not a bad short play, but there are definitely better short plays out there in the market. So it may actually be better just to avoid this one and look for a better play. Again, depending on how high your risk tolerance is. But I think going short here is a pretty good play. Alright, so pretty straightforward, guys. This was a hot stock last week. Went squeezing due to the overturning of Roe v. Wade. It's still squeezing. In the long term, this looks really bullish. But in the short term, this will probably pull back before it goes to the upside again. So if you want to go long, 110, not a bad entry, especially if you're going to buy and hold for the long term. Huge upside potential already. But personally, I think it'd be way better to try to get this back at 50 cents where the gap is. And if you want to go short, it's a pretty good play. You should be able to make money on the short side here. Just a bit risky. High risk, high reward. So if you want to go short, please do that at your own risk. But I do believe that you should be able to make 55% relatively easily to the downside here. Again, as long as you're able to withstand some upside pressure here. And again, I would cover at 50 cents where the gap is. So congratulations to everyone who made money in the stock today. Consider taking profits if you're up. Not financial advice. And good luck to everyone currently in the stock and to everyone looking to take a position. This is EVFM, Evofem Biosciences. Thanks everyone for watching today. I appreciate you guys. Please, like the video. Please subscribe. And catch me every weekday after market close on The Smarter Gambling Show. You apes already know, diamond hands to the moon. I'm Ty. This is Smarter Gambling. See you guys tomorrow. Peace out.